Your thoughts on this report?
So I think exactly as you were describing, it's going to keep the Fed on track for a 75 basis point move at the next meeting. It's broadly within the parameters of what they were expecting. As you had said, that they were hoping that they'd still see a little bit more uptick in labor force participation, but they didn't get that. They do, I think they are expecting that the unemployment rate will start to move up a bit. Something that'll be heartening is that we didn't see an acceleration in wage growth. So that isn't taking off. That would be the most problematic thing for them, because that would suggest inflation expectations, or inflation really becoming quite entrenched. And so I think that's the other key thing to be looking at going forward. Where is wage growth going? And so far that at 5%, obviously, that's much higher than it has been, but certainly lower than pretty much any measure of headline inflation.
Randy, I want to stick on participation rate for just a minute. We haven't gotten back to the pre-pandemic levels, and a lot of people were hoping for a soft landing where you have more people come into the labor market who were sort of sitting out during the pandemic and the direct aftermath. How does this rejigger the expectations of the Federal Reserve, of this labor market, and how much it's been transformed post-pandemic?
Well, I don't think this one report is really changing that, but I think they're gradually coming to realize that a lot of people are just not coming back in. For example, older workers, labor force participation had been quite high before the pandemic, and now it's significantly lower. Older workers found a lot of people that they knew didn't make it through COVID. They want to be able to spend time with their families, and so I think they're much less likely to come back in, and that's a challenge for the labor market because those are the most skilled workers. And this is one of the challenges that we're seeing now: this skill mismatch. That there are a lot of openings, but there aren't people who have the right skills for those jobs.
Randy, I just have to point out this tweet from Ivan the K on Twitter. Reminder, be sure to fit today's labor market report into your narrative, even if you need to use a shoehorn. How does the narrative change, or what should the narrative be heading into year end as we look at the multitude, the totality of data, and try to understand where we are in this economic cycle?
Well, I mean, we're fortunate that we still have a very strong labor market, and so people have a lot of job opportunities, despite the Fed having moved interest rates up so much and so quickly. But as I had said before, monetary policy has impact with long and variable lags. So typically it starts having an impact in about 6 months or so, and we're getting to that point. So I do think that we're going to start to see the labor market weaken through the rest of the year. But the Fed's going to keep at it. There's nothing in this report that is going to suggest to them that they need to pull back. They're going to continue full bore towards 4+ by the end of the year, and then somewhere in the mid 4s or so they'll or closer to 5 they will stop. But that will then depend on the data and how things are evolving next year, and also the uncertainties of what Mr. Putin might do.